A lot of options traders from traditional finances, they usually, when they talk to me and we get into crypto options, they bring up some strong arguments for selling options as income. Well, mainly because for traditional finances, we already have some indexes for selling puts, for selling calls. We have BXM, put, all of these that show the performance of selling options, both calls and puts, for income on the S&P 500. And most of them, usually they return to me saying that it doesn't make sense because over an amount of X years, you're making less than just by holding the S&P 500. And usually that's true. And while yes, these indices, they show that you are less prominent, that you are way better off by just holding the S&P 500, just buying and holding. Well, actually, these are not always the best options to sell. When you look at it, sometimes you gotta go a little bit in the money. Sometimes you gotta go a little bit more out of the money, sometimes closer to at the money. Well, there's never a specific strike that you should follow. There's more a rule of a thumb of depending of implied volatility, of the premium itself. It doesn't make sense for you to sell a call or a put for a very short premium because the risk will be higher. For example, for crypto, I usually go for a percentage. So I have a specific spot, a specific percentage per week. And when I'm able to meet that, I open that position. Otherwise, I either just step out and don't sell any positions, just hold, or I try to see if any others are compatible with what I believe the market will do in that following week. Because my favorite strategy is selling weekly. So from Sunday all the way to a Friday, and then so on and so forth. But for crypto, we have zero DTEs now, and we also have spreads. Spreads being way more profitable than just selling options as a whole. So now we're going to take a look at a little bit of data. So this video might be boring. This is why it's just going to be very short. So we're going to look at a little bit of data for traditional finances. So for the S&P 500, mainly because we don't have a crypto index for puts over Bitcoin or for calls sold over Bitcoin. We don't have that. Otherwise, we would have been looking at that data. But if you look at this channel is almost 5 years old. And here we traded options for the entirety of 2021, 2022, 2023. So I have live streams and data to show you that back then when volatility was 150, 160%, we were usually making 4, 5, 6% per week with options just by selling options. And now sometimes we can do that with spreads here on Bitopics. But before we jump into Bitopics, let's look at some data for the S&P 500. So here we have some numbers. Editor, if you want to zoom in a little bit, the put and the BXY index, also the BXM index. The put is selling puts over the S&P 500. The BXY is selling calls 2% out of the money, and the BXM is just selling normal calls on S&P 500. And all of these have performed better than the S&P 500 from 1988 all the way to 2011. So annually, you would have been making way more money by doing this than just by holding the S&P 500. But you must be saying, well, it's just 1.8%. It doesn't make sense for me to go through all that work just to make a little bit more in percentage. Well, for the traditional market, that 1.8, 1.4% annually compounded is amazing. And another thing that you have to keep in mind is that while you're also gaining that percentage, you're also protecting your drawdown, meaning that when the market goes down and the economy is going down, well, you usually lose less money by selling these options than just by holding the S&P 500. So it also hedges your losses. And that is way better than just winning big every time, because winning a lot and losing less is the key strategy for you to maintain and grow your capital across multiple years. Now, in crypto, things are faster. We know that. Things tend to be way faster than we're used to in traditional finances. And this is what I was talking about before. These are put, S&P 500, the MSCI, a lot of other indices here shown. And you can see here that the put has almost the same returns as the S&P 500 since 86 all the way to 2018. But if you scroll down right here to the drawdown, meaning that how much you lose each time that the market goes down, you can see that for the biggest loss for the put index compared to the S&P 500 is 32.7% against 50.9% in the S&P 500. What does it mean? It means that when you are losing 50% of your whole portfolio, of the entirety of your money with the S&P 500, you lost only 32.7%. You might be telling me, well, you still lost, Everton. Yes, you did, but you lost less than if you were just holding. So here you are mitigating, you are protecting yourself from a downforce, from the crashing of the markets. This is called hedging. So you're protecting your own assets. This is gold, because at the end of the day, this difference between the 50 and the 32% 31% is what compounded will give you way more money in the selling option strategy than just by holding the asset. But here, none of these show spreads, but we actually have some interesting returns for spreads. This is a straddle return, so an advanced strategy that we teach right here in Bitopics. Just search for spreads, straddles here on Bitopics, and you can find the video that I did back last year about advanced options on Bitopics. So by doing a straddle one day before earning with expiration on the day of earnings, you get around 0.23% returns. And if you do that one day before earning and the expiration is the day after earnings, you usually get around 0.31% of return. So very, very profitable when you're used to it, when you know how to do it. It could be straddles, it could be spreads, it could be condors, whatever strategy is that is advanced, that gives you a little bit more play because it is more advanced, it requires more knowledge, but it gives better returns and better chances of success, which at the end of the day, it doesn't make sense for you to win big on one, but then lose small 3-4 times later, than to just keep winning small, win after win after win. This is way better. The second option is way better. So when we look at crypto, when you're trying to make money by selling options, you can usually sell above the current price, or you can sell below the current price, meaning that if you sell above, you're selling a call. And when you sell a call, you want the price to stay below the price that you guys are selling the strike for. So let me give you an example. Let's say you sell right here a 70,000 call. So what do you want to happen? Well, you want the price of Bitcoin to stay below the 70,000 that you sold. If that happens, you're going to keep that premium, and that option that you sold will expire worthless. The buyer doesn't want to do anything with that option because it expired worthless. For him, it would have been way better if the price of Bitcoin kept going up, because he would be buying Bitcoin for cheaper from you at $70,000. Now, in the case of a put, let's say you sold a put right around here. This is the $58,000. So you sold a $58,000 put. What do you want to happen? When you sell a put, you want it to go higher. Well, this would be the case right here. You sold a put and the price of Bitcoin went all the way to $67,000. What happens? When you sold, you collected a premium right up front. That premium is yours to keep, and that option that the buyer bought from you is worthless because he wanted the price to go down. He was buying a put, meaning that he was bearish. He wanted the market to go down to make more money out of it. He was hedging the market. So if you keep doing that by analyzing, for example, I am a huge fan of using Bollinger Bands. So when it touches above, I usually try to sell a call. When it touches below, I usually try to sell a put. So here I would be selling puts right here, puts right here. I would be selling puts right here. You know, I could even sell a put right here, but then this would hurt me. Why? Because we would have gone down by that 20% move that we saw right here. Well, how to prevent that? You use other indicators. Of course, here you can see that the Bollinger was very, very close. It was bottlenecked. And I usually say this in these videos, when we see a bottleneck Bollinger, that is not a good thing to act on before seeing what direction is it going to go for. Because when it bottlenecks, it usually tends to explode towards one side. And is exactly what happened. So here, if I was using other indicators, for example, the RSI and things like that, it would have been way better for me to sell a call. By selling a call, I would be betting that the market would go down and I get to keep the premium. So you might say, well, if that was not as profitable with the S&P 500, the put was pretty much break even with the S&P 500, how is that better for crypto? Well, with crypto, we have more volatility. With more volatility, we have better premiums. So how much money you're making out of each option that you sell, you're making way more compared to the traditional finances where volatility is lower, unless you're looking at very volatile assets, but then the liquidity is not as good. But for crypto, we do have liquidity and we have a lot of volatility. And you can do, as I said, these spreads that we talked about here in the channel. And where can you go and see what returns you can get with selling options and selling spreads with crypto? Guess what? You can do that at Bitopics. If you go to the copy trading, we have tangible data for you to see where we are trading options. Here we're selling volatility, we're shorting volatility, we're using advanced strategies, so straddles, strangles to generate income. And guess what? You're seeing 10%, 11%, 9% returns yearly on selling puts on the S&P 500. Here we're seeing 84% returns so far. This is already money made. 84% returns already made throughout 2024 until now with stablecoins. You're not buying Bitcoin, you're not longing Bitcoin, you're not longing Ethereum, you're not longing Solana, nothing like that. Because I know some of you might not be bullish on Bitcoin, might not be bullish on Ethereum or Solana, whatever whatever that is. Here, it is a stablecoin strategy using as underlying asset Bitcoin, Ethereum, and Solana, but they are all cash settled, meaning that your money is in dollars. We're just betting on the volatility of these cryptos, so Solana, Bitcoin, and Ethereum. And if you click right here on Explore More, you can see all the wins and losses that we had. And guess what? We haven't closed a single month in the red. We haven't had negative months since we launched. And not only the Zero DTE, but also the Phoenix strategy, which has been going for 2 years now. So 2 years now, no loss on any of these strategies. This is the power of options. It doesn't mean that we don't lose here. You can see we have some drawdowns right here. We have some drawdowns here as well. But no, this means that we have losses, but overall we win so much that every month has been profitable since then. So this is the power of options. And you might find options so super hard. This is why we made the copy trading. Here, you can just come, deposit your money, and we do the trading for you. Well, what do we win out of it, Everton? You might be asking. Well, we get 30% of the success fees, but the number that you see already, this one is already yours, what you get to keep. Everything that you see right here is already net. So this is your money to keep, already excluded the 30%. But you can even lower the success fees by clicking right here. You're going to see all the information that you need to lower the success fees and to keep even more money than what is written down here. So options are indeed very profitable. You just have to understand all of these options. You just have to learn how to use just a naked call, a naked put, advanced strategies with multiple legs. And guess what? We're building a course. I'm recording a course as we speak. We already have some of them pre-recorded. I'm creating this course, which will be offered for free here in Bitopics, where you can learn options and not even rely on us anymore, not even rely on the copy trading, doing your own trades by yourself and generating income that way, or just to understand how we trade these options and how we make money for you. So this course should be ready very soon. If you have more info, if you want to know more, the Discord is also here. The second link in the description. This way you can jump in, ask in the Discord more about option, more about anything options related, and I'll be more than happy to answer your questions there. So I don't know how long this video will be, but nonetheless, I hope you guys enjoyed and you understood the power of options. If so, I'll see you guys on Friday for another video. So in the meantime, take care and peace.